This market is on an absolute runaway freight train right now. And this is why I say constantly, all the time, all-time highs are bullish AF. There's nobody up here trying to sell out a break even, right? Nobody is waiting up here trying to sell out a break even. People are piling into the market as hard and fast as possible. Joe, look at this. This is crazy. Look at the S&P 500 map. And this is just today, okay? Just today. But also look at it in the last 1 month performance. You ready?
Yeah. Whoa.
Dude.
That's a lot of green.
That's a lot of green. Like the market is on a big, beautiful trend right now. Don't even think about getting in the way of this. Some of these stocks are absolute monsters. AMD in the last month, 88%.
Wow.
Intel, 100. The Intel company has doubled in value in 1 month. Right?
Wow.
I was in Google. I made some money. I was in Nvidia. I made some money. But I didn't make AMD money or Intel money, right? Those have absolutely gone crazy.
Here's one for you though, Chris. Look at Netflix. It's a bit on the right in the middle. It's red. I made money on that guy.
Yeah.
So you can make it
out before earnings.
Yeah, you can make money on anything. Yeah.
That's right. That's right. Yeah. So this market seems like it can't even be touched. But here's the thing. Please understand. I've been saying this for a minute, and I'm still going to say it, and I'm putting my money where my mouth is. I feel like the market is in a very over greedy position right now, especially seeing this trajectory. And look at the Nasdaq. The Nasdaq even more so. I mean, this is over greedy to a T. If I go look at the market breadth tab and I pull up the summary right here, what you're going to see is the fear and greed at 83 on the SPY and 85 on the Qs. There's not much higher it can go on the greed, but there's a hell of a lot lower it can go on the fear. Now, granted, like I say, you don't want to get in the way. But where I'm going with that, Joe, is I'm really anxious about this market now. As great as it was, this big gap up, and you know, gap and goes, that's the real thing. I don't get scared of gaps. But I'm actually feeling nervous here. And I'm not going to be the guy who says, oh, this is where you got to start buying puts because you're going to go bankrupt. In fact, I wanted to watch this video with you. Hey, look at that. I led it all the way back around to watching this video from Jason Shapiro, one of the market wizards that I worked with. And this video is called Why Shorting All-Time Highs Will Bankrupt You. Did you like that callback I did right? That was some top-notch professional YouTubing right there. All right, let's watch this together.
26. What do we have here? Well, the stock market.
Look, the way that he's set up with both you and I, it's like we're all friends hanging out together. I like that.
That's right.
Went up again, and it's at new all-time highs again. And one would think, as one does think, as just about everybody I think thinks, that it's not sustainable for the market to go up every day or whatever, 12 out of those 13 days or whatever the number is.
I want to point this out as well. Guess what day this was published? April 16th. We're May 6th at the time of this recording. Okay, hang on. I want to show you April 16th. This was the buy signal on SPY, by the way. I don't want to move that. He recorded this on this date here. The market, the SPY, has gone up another 5% since that point. So exactly what he's saying here, you don't want to short an all-time high because it will bankrupt you. Perfect example. Okay, let's keep going.
And then at some point we have to sell off and consolidate and slow down and all this. And I think that may be the problem, is we all kind of know that that's the case. And so we all kind of try to sell the market, as we did this morning once and this afternoon once. And then we all get squeezed when we try that. And, you know, it's like we're in this lockout rally here. And it will have a down day at some point, clearly. I don't know that that means the market is done going up. It's going to be tough. You know, we did have some, I would call it positive news on the war front today, which we know that the negative news.
It's so funny, right? Remember, recorded April 6th. This is the same story that's happening today, or 16th. Today is May 6th, 6 de Mayo. And he's saying the same thing that we just heard this morning. Positive news on the war. And what's happening once again Interesting. Joe, the parallels here from a couple weeks ago to today are so interesting. Wouldn't you say?
Yeah, and does that make you concerned that it's even more of an elevated risk considering that amount of time went by and the message is pretty much identical? Because
Yeah.
I mean, for somebody who's a little newer to trading like myself, there's a lot of FOMO. Like you hate to see these things go up without being on the train. The train keeps going past you on the station. You know what I mean? And so, yeah, for someone like him to say, "Look, don't be shorting this because it's gonna turn on you." He's not saying when. He just says it is going to, right? So it's a difference between the experienced trader and the inexperienced trader. How you view these runs.
Yeah. And at this point, honestly, I am nervous AF. I as much as I love a great trend, I feel like right now we're looking at we went up the stairs. We're looking over the catwalk. My house has a catwalk. And we're looking over the catwalk, and then we might just trip. Like that's where I'm looking at right now. And in fact, we have a VR headset, and I tell the kids, I'm like, you cannot use this upstairs because if you got the VR headset on and you fall over the rail, you're never going to see it happen. So yeah, that's one of the things, right? I could see that. Oh man, I could see that, and it makes me so anxious. I'm actually glad to be out of the market because I would have a lot of anxiety watching it just rip like this. By the way, Linda has a great post right here. Linda says her Roth is up 79% year to date. Wow. May 6th. I think I got my 82 cents a day out of a member. Way to go, Linda. First off, you're destroying my account, so outstanding work. Second off, well done. That's all you, Linda. 100% you. And I'm so proud of you. And everybody watching could do something similar to Linda by following the principles that we teach.
Wait. There's 3 points here, Chris. The third point is she will never pay taxes on that money.
I am not an accountant. I'm not going to say anything about that, Joe. That's one of my lines I don't cross.
Yeah. Yep. She won't.
Okay. I'll take your word for it. But I did see a question. Jason Shapiro's a futures trader. Were you trading futures when you worked with him? The thing is that timeless principles work all the time. All the time. And it doesn't matter if you're trading futures or options or I don't know about Forex or crypto, but you can apply the same thing to futures, to options, to stocks. Like I said, I don't know about crypto and Forex, but I do know one thing, right? When you apply the timeless principles, doesn't matter what the asset is, the human behavior that drives the imbalance of fear and greed that causes this right here. Joe, we have an obvious imbalance of greed. Obvious imbalance of greed. And it's running like crazy. Let's keep going.
And the war front has been ignored. So the question now is, how will the market do on positive news? Will it ignore it? Well, it didn't ignore it. It didn't really do much. I mean, the Nasdaq was up 125 points. The S&Ps were up 17 points. The Dow was up over 100 points. So it didn't go down. That's for sure. But oil went up. So the stock market continues to not care anymore about oil as it has since that April 2nd day that I talk about every single day. Silver continues to be very disappointing in my view. I would have thought that silver would have led this rally.
Okay. So he brought up silver, and I'm glad he did because somebody mentioned this earlier. The market move right here reminds him of silver a couple months ago. I completely agree. In fact, what I want to do, and thank you for that comment, Wes, let's put silver and the SPY side by side. So on the left hand is SPY, on the right hand is going to be silver, SLV. To say, don't get in front of those big trends. You don't want to short this market, but you also don't know where that top is going to be. And look, silver fell 30% in a single day, right? And silver hasn't fallen 30% in a single day since Judas betrayed Jesus for 30 pieces of silver, okay? It's never done that ever. I would hate to see the market fall 30% in a single day. And I am not calling for that, people. I don't make those kind of predictions. But yeah, the frothiness, the excitedness, the crowded tradeness that silver had right here, I absolutely can see it happening once again in SPY.
In assets, and it has not. It has lagged by a lot. I would have thought that because of A, the positioning, and B, its place in AI. But to this point, it's lagged. So therefore, it's just not good right now. When it acts better, I would be happy to get along, but it's not acting well. So I'm not gonna, as always, tell the market what it should be doing. I'm going to let the market tell me what I should be doing.
Huh? Ever heard that before, Joe?
Yeah, it sounds like he's gonna wait for a setup, and how long will he wait? As long as it takes.
As long as it takes, right? And you got to listen to the market, right? Don't try and tell the market what to do, right? Yeah, it's almost like I learned from Jason. How about that?
Because I trade the market, so that's the story there. Bonds were down, crude up, inflation, yada yada yada. I don't really know what the story is there. The positioning, which up here showed commercials mega short, has clearly come back to much more neutral area here. So I don't know if there's a positioning edge there, and that's why I think we're kind of just fooling around now. This one, okay, there was a positioning edge. The positioning edge got taken out right there, and now there's no edge, and we're just flailing around. And the dollar was stronger today against most things. I guess maybe some of the economic indicators were a little stronger in the U.S. today. I don't really know. This was a little bit of a surprise, I think, at least a correlation surprise, given how things have been trading since the war. But these correlations are not going to hold forever. They never do. Slowly they break, just like the stock to oil correlation broke on April 2nd. There's no reason that the bond to war trade thing can't break as well and start focusing back on what it used to focus on, which was the expectations for Fed cuts and all that over the course of the year, which honestly is pretty up in the air right now. And so therefore, bonds are just going to sort of fool around. Remember, the market is going to move every single day. Every single market's going to move every single day. And that doesn't mean that there's some big meaning to it. It's just random moves most of the time. And I kind of feel like that's what dollar was. And I kind of feel like that's what bonds were. But it doesn't seem to me like short dollar is necessarily the trade anymore. But I really don't think long dollar is a trade either. So it's clear what the best asset has been, much to my surprise, is the stock market. You can't argue it. Well, what other market is making new all-time highs here? We hear so much about how the Fed is screwing up, and we hear so much about how China is taking over from the U.S., and the war has put China in such a better position than the U.S. and all this. And meanwhile, I don't see the Chinese market on all-time highs. I see the U.S. stock market on all-time high. So this is always the story, don't over macro. I feel like the macro is always bearish for some reason, and we are on all-time highs. So argue with it all you want. Explain. I can do it with you. I can be right there with you. All the bearish things. I can give them to you all day long. But we are on all-time highs. So,
Joe, there's always a reason not to invest, right? There's always some sort of macro factor to be scared of, right? And Joe, I think you remember there was quite a big kerfuffle when Chris went long right here after the turn, right? Now, granted, all the scariness clearly did not transpire, right? Clearly did not transpire. And in fact, we have the exact opposite right now. We're having people the same people, by the way, who are like, oh, you can't invest right here. It's so scary. Iran, are the same people up here saying, you're so dumb. How could you sell out? Iran, right? It's the same people. It's the same thing. Happens time and time and time again. And this reminds me of the shoe shine boy story. And for those of you who don't know, this story comes from Reminiscences of a Stock Operator. Joe, have you read this book yet? Oh, hey, be sure to subscribe, by the way. You need to get this one. Reminiscences of a Stock Operator. This is the story of Jesse Livermore, one of the greatest traders in the early 20th century. And one of his quotes, and this is a really good read and probably great on Audible too. One of his quotes is that when you get to the point where the market's so frothy that the shoe shine boy is giving you stock tips, or in this case, the Uber driver is giving you stock tips, that's the time to sell and get out of the way. And I feel like we're there, man. I really feel like we're there. But again, that does not mean go short. Doesn't mean go short at all. It just means know where your risk is at. And I think there's a lot of risk right here.
You want to fight the tape because you think that things are bearish, as my friend Dan Nathan would say, have at it. But keep in mind, you are fighting the tape. And my advice would be, if you want to be bearish, that's fine. But don't fight the tape. Wait for the tape to confirm it. That's all we're going to get.
for context, when he says don't fight the tape, he's saying don't fight price, right? Price is telling you one thing. You don't want to go against what price is telling you. You have to listen to what the market's saying.
It appears some good war news over the next couple of weeks. And at some point, maybe the market will fail on that good war news. And then you wouldn't be fighting the tape to try and get short. We're going to get positioning tomorrow. I would assume that speculators got a lot longer, given what the market has done here. They've been forced at the very least to get out of shorts, I would think. So maybe we'll get something that tells us it's time to start going short. We're certainly seeing a lot of options data come through in the last 48 hours that would indicate that very fact. I don't count only on options data because a lot of times finding options data, depending which options data you're looking at, gives a different story. But we are certainly starting to see some options data that indicated the market was maybe a buy here in this area, is now indicating it's kind of a sell. But I mean, you look at things like AAII, I ain't convinced. You look at things like even a CNN fear greed, they're not totally convinced yet. So I'm hesitant, but it doesn't matter whether I'm hesitant or not. The market closed at an all-time high today. I can never be short a market that closes at an all-time high. And I know.
There you go. Take that to the bank. Never be short a market that closes at an all-time high, which is going to do today.
People are like, well, and then the market goes down. They're like, oh, you could have sold the all-time high. Yeah, right here. Yes, if you did sell that one day, you sold the all-time high. Obviously, at some point when the market goes down, you could have sold the all-time high, but you would have been selling the all-time high all the way from here. And if we really go back, you would have been selling the all-time high all the way from here. Here, sell the all-time high, sell the all-time high, right? So don't be telling me, that it's a good idea to sell the all-time high over time. It's not. One time it is, but I'd rather sell the day after. In other words, a day when the market is confirming that it's not trading well. I'd rather sell that day. That can be much better odds than just selling an all-time high close. Just my view based on my history. Okay. Anyway, that's it. We will see everybody.
Look, there's so much wisdom in this. Like he's just spouting it off. He's just being super casual about it. But like legit, if you think you're the smart guy who's going to find the top, remember the whole like brisket sandwich and whatnot, right? You're never going to find the top. You don't know where the top of that is. So let it run as far as it can. And then, like he said, right, wait for the confirmation. If you really want to start shorting it, wait for it to confirm that it's going the other direction, and then you can short it. And same thing again. So where I'm trying to get at is don't get in the way of this market. It will obviously rip your face off. But again, having a plan, whatever that plan is, and your plan should absolutely not be my plan. For sure, don't be my plan, because I don't think you could ever trade my plan, and I couldn't trade your plan, and that's totally okay. Totally okay. Everybody has to come up with a plan that fits them and their personality and their temperament and their portfolio. But when you have a plan and you look at this market, you should not have any FOMO. Now, I know that's easy for you to say, Chris. You've already made $4 in the stock market. When you look at this and you look at your plan and you say, this doesn't fit my plan, there's no emotion here. It's just, I have nothing to do. I literally don't have anything to do. So what is there to stress about? I have no FOMO for a trade that I'm not going to take anyway. I have no FOMO for a trade that I've already closed because I hit my exit signal. That is life. Hang on. There was a junior says he heard a story today about a striper. I guess that's a person that works like on the road, striping the road, telling a guy how much that's very unusual to see women in construction. Our audience is now 93% men. So I would have thought it was a male striper, but that she was making so much money day trading. He said it must be time to sell. Yeah, I assume if the road stripers are telling you how much money they're making, see what I did there, Joe? If the road stripers are telling you how much money they're making, it might be time to sell.
Yeah.
So with all that out of the way, of course, having OVTLYR gives you a leg up. So you know what to do, right? Now, of course, nobody's going to catch the top. Nobody's going to catch the bottom. And you don't need to. You want to get that 80% in the middle, and you can make you can make generational wealth in the middle, right? In the middle. All right. So Joe, if somebody are looking to save time, make money, and start winning with less risk, what do you think they should do?
Well, they would go to OVTLYR.com and they would use the trial membership or become a subscriber, which is what I did when I found out how awesome this tool is. And if they do it today, Chris, they will be able to meet me in person live tomorrow at the new customer orientation, an hour and a half after market open in our Discord.
Wait,
And
you're
there'll be a-
selling it as if like you're actually going to meet them in person. That's what you just said.
Oh, I will. Yeah, they're going to see me on their screen. And if they want to, and they have a camera, they can join me on stage and they can ask me questions just like everybody else that's there on stage.
Joe, you're confusing the mess out of me. You're not meeting these people like at a place, right? You're meeting them online.
on Discord. On Discord.
Okay. Oh,
Okay.
Good.
So now that they have access Discord and they've made it to the new customer orientation, they have an opportunity to come back and watch one of these videos right here.
That sounds great.